This is Rod Goosen and Spooman for Risk for September 2nd, 2016. All times on the chart are Central Standard Time. In a continuing review of the market activity for Friday, September 2nd, we had mentioned earlier how we were anticipating a drop into at least the first standard deviation from the IB calculation. But we ran out of time in order to trade it. Nevertheless, high probability, 82–83% that this would happen. And not only that, we dropped a little further. And right at the time when the YM hits the second standard deviation is where we find the bounce back up on the ES. Now that was forecasted by the premium as well. So let's take a few minutes now and go over to the premium and let's review what we saw. Now, if you watched our morning video, we mentioned that this little move up on the premium was a little bit disconcerting. A little bit too high because it came way up above our upper threshold area. Now, we were still expecting a drop, but when we finally did see the market drop down to the initial balance level, we felt it might be best just to call it a day. And that's exactly what we did, partly because we ran out of time to trade. Now, beyond that, however, when we come over here and we see this drop in the premium, at least on the first bar, this is pretty much of an indication that we may be able to get a rally going, because the very next bar set the low threshold at -188. Okay, so moving forward, as the market comes down, all right, as the market comes right back to this level, as we have mentioned so many times, it is at that moment that when that price is hit that oftentimes the premium tanks again, which is exactly what it did here, and we saw the market continue to drop even further. When it comes down to this level at 72.50, again, we've got a naked bar situation here and way below the threshold, indicating that this market is going to continue to drop. Regardless of what happens thereafter, we're going to see this price tested. So we come back up, and incidentally, all right, let's just look at what happened right in here. You see how the premium pushes up above this threshold right in here? Okay, so right about there, just a little lower than that. So that's indicating this is going to come back up. And when it does, what do you see happen? Get a little bit more of a push, not much more of a push higher on the premium at that point. Market goes up a little bit more, and when it hits the next tick up, the premium goes up even again, until finally both in here as well as in here, your last push up fails to break the threshold, and we see the market beginning to drop once again. So this price here, 72.50, that would have to be tested. Okay, so we're just going to pull the line down here just as a point of reference, and we see that take place over here. Now, when that does, the first bar, this is a 10-second bar, drops below the threshold, but the very next bar sets a new LT level at -190. All right, -190. So up we go. But now back up just a bit to this point here, 12.13. The move up on the premium leaves this price at 76.50 as a naked bar. And that is not breached here. So we've got a real naked bar situation here. So as this market drops down to the low and we find ourselves reversing with that low, higher low on the premium, then you can anticipate this move back up to 76.50 based upon that particular bar. So you had a real nice way to anticipate about a 4-point move right back up. Now, again, watch the premium when this happens. Okay? So we're going to use this threshold level as a point of reference. Now, when we come back and we hit this price, again, right? As we're moving closer to it, we see the premium starting to breach that threshold. And then right in here, for the first time, we hit it. But we're below the threshold, so we don't really have much to work with. But that is right smack dab on that level. Highs at 102. And that threshold, let's go back here. Take it all the way back here. Is at 102. All right, it's right there. That's pretty powerful. Okay, so as we move up here for the first time, and then we drop below on the second time, we get a little bit of a drop again. And then she begins to shoot up again, this time just a little bit higher. A little bit higher on that bar. Okay. Not enough to keep us going. But on the next try, it pushes up above. Here's your timestamp, 13:39:10. The premium pushes up, and up you go, and then even higher, leaving you with another threshold at 77.50. That's a naked bar. So when we push up one more time, again, we move higher than the threshold, and then finally on this bar, way up above it, setting a new threshold price level. We push up again, we're above the threshold, and then finally that price is tested right in here, and we're below, and we don't go any higher. Okay, so that's as high as she went, right in here to close out the day. Very nice, very nice. Premium was very useful today in anticipating these moves. We encourage you, as you go into the final quarter of this year, I tell you, if you don't know how to read the premium, you're really doing yourself a disservice. Our services do not cost that much. But you can't afford to trade without a proper understanding of the premium. And when you do, you hardly use it. There's hardly much of a need for anything else. The only thing that really, I believe, personally matters beyond the premium is your market profile. Your market profile is a wonderful tool, and I adhere to it. But beyond that, the premium is a beautiful piece of information that you just need to learn how to read. And once you do, your trading is going to be much more effective. I'm Rod Kusin and Spoon Man for Risk.